this is going to be a good video because this is how house prices may be going down this year. And we're going to go into it. So here we go. 3, 2, 1. Hello guys and welcome to another video. My name's Mark. I'm an entrepreneur and property investor. And in today's video, we're going to be looking at the Halifax House Price Index. I was struggling saying that earlier, which is the release from January reflecting December's data. So what I wanted to do was also give you some of the comments in there because I think it hints towards a slowing in the housing market. And I think that's really interesting information. So guys, if you haven't already subscribed to this channel, why not consider subscribing? Remember, we give all this information completely free of charge. We don't sell a course. We don't try and upsell anything at all. This is all so that you got the information, you can make your own decisions when it comes to investing. And in terms of this video, if you could give it a big like, it massively helps me out with the algorithm and I massively appreciate it. Support costs nothing and I really, really do appreciate every single one of you. So guys, let's have a look first of all at the data behind it because I think that's the interesting thing. And then from that we can go to the commentary, and from the commentary we can probably extrapolate a little bit of information and start to make some predictions for the year ahead. So the first thing I want to do is take some of the headline data. Number one, the monthly change in December was 1.1% up for the housing prices in the UK. Now, for me, who's got a house price, we track the value of my portfolio. I've got about £3 million in July last year, and since then it's risen to £143,531. Now, add another 1.1% onto that, and this month I would have made £34,578. I didn't say that right, did I? It's £34,578. Now, it certainly doesn't feel like I've made that because it didn't hit my bank account, but that does bring my portfolio, if it's risen by the average, to £3,178,109. So a really, really good growth figure, and actually well above the average when it comes to the UK. As we know, the average prices in the UK rise between 4 and 6% a year. At the moment, the annual rise this year in 2021 was 9.8%. Now, there were some significant laggards. For example, London only rose by 2.1%, which was behind inflation. However, there were some big gainers like Wales, 14% up, Northwest, 13.8% up, and then there was the Southwest was up significantly as well. And there are regional variances to all of this. But the thing that really came home to me was the average home price, currently sitting at £276,000. And if you look at the biggest gainers versus London, well, it really was affordability, in my opinion, and this is just my opinion. I think it was affordability that really held London back, whereas everywhere else moved forward fast. If you look at the areas that done well, they had cheaper properties. So I think that tells us something when it comes to the housing market. I think affordability is going to be key moving forward. And what I've done down here is just to highlight roughly what the affordability is on an average home. 276,000 is the average house price in the UK. The average mortgage on a 276,000 is 137,000, and the average payment is just around £700. I've rounded up slightly. However, with interest rates being record lows, this average payment has actually been dropping recently, even though the house price has been increasing. So it depends on where you get your data from, and it's quite hard to extrapolate all the big data, but the general theme for me is interest rates have gone down, house prices have gone up, but the average payment has stayed about the same. It hasn't massively changed. So I think that interest rates, when it comes to house prices, are absolutely key, and the history would tend to support that. Now, we look at one of the comments on the Halifax House Price Index, and it said, looking forward, interest rate rises and inflation suggests rises will slow considerably. Now, they go on to say something along the lines of, we expect government policy to support prices, we expect it all to stay about where it is, but for this year's gains to be far more muted. Now, I wouldn't be surprised at all if they were more muted. I mean, at the end of the day, 9.8% in a year is absolutely phenomenal. 1.1% in a month is incredible, and I'm looking forward to the next month's data to see what happens. But they're missing one more trick, I think, and the trick that they're missing is just how much money has been saved by people during this crisis and how much extra money has been printed. And that will all feed into inflation, of course. But I think that will also feed into asset prices to a greater extent than people are factoring in. So my personal opinion isn't necessarily a crash, it isn't necessarily that things are going to go down, it's that it will continue to rise. I actually agree completely it will continue to rise. I think it might rise a little bit faster than considerably slower, if you ask me. I think this year, and I'm going to put my neck out, I think we're going to end the year on about 6 to 7% of price rise growth. And I'm going to stick my neck out and say whatever inflation is will be about 1% or 2% above that. So I think inflation is going to be relatively high this year. I think we'll find out by the end of the year that the inflation during 2022 was somewhere between 5 and 7%. And I believe that house prices will rise between 7 and 9% based on that data. And it really is because I don't believe that the inflation is anything other than the fact we printed loads of money. Prices, there's a supply shortage in lots and lots of industry. Lots of investors and lots of people have bought up a lot of the stock and people aren't moving. I don't see that changing. We're not building loads of extra houses, so there's not going to be a massive increase in supply. So I don't see where the downward pressures, other than interest rates, are going to come into play. And if we look at interest rates, we have a long way to go until it starts affecting people. If we look at, for example, this average house price, 276, let's say as an investor I bought this. I haven't done the sums, but I'll do it now. Let's say I put, for ease of sum, I put a £76,000 deposit down. I have a £200,000 mortgage. Well, you can fix at the moment at 1.5% on a buy-to-let mortgage. So that's going to give you a payment of under 300 quid a month. I mean, it's under 300 quid a month, isn't it? Yeah, it's going to give you an interest-only payment of under 300 quid a month. That house is going to rent out for at least 1,500, I would think, for 13 to 1,500 depending on the area in the UK. That's going to give you 8, 10, 12% return on investment, something like that. It's still incredibly affordable. Now let's move interest rates up 0.5%. Which is sort of the baseline thing that people are talking about over the next year. Well, suddenly this mortgage payment is going from 300 to what? Is going to like 370. Well, your return on investment is still going to be about 8 to 10%. And frankly, the interest hasn't really made that much of a difference. And as a landlord, as a greedy landlord, as we're referred to, that 70 quid is probably going on the rent. So I personally think this interest rate rise is probably being overplayed. I think most of the inflation issues, yes, whilst there has been a lot of money printed, seems to be supply side for me. I'm trying to buy cars at the moment for my business. It's quite hard to do so just because of supply. It's not because we haven't got the money. And it's not because finance isn't available. It's a supply issue. It's all about the supply. In terms of oil price, for example, it's all about supply. There's not enough supply of oil. Gas, it's all about supply. I mean, I feel like everything's supply side. Everything I look at is supply side, and I think most of that will start to unravel over the course of the next 12 to 24 months. And as it does, inflation is going to become more muted, in my opinion. Now, I understand there are lots of opinions on this, but I think, and I'm going to stick my neck out, I'm going to say for next year, inflation plus 2% is where we're going to sit in terms of property price growth. And I'll make a note of it somewhere a bit neater than that, and we'll refer back to it in a future video. But let's just review quickly the data we have here. Monthly change 1.1%, average house price now 276,000, annual rise of nearly 10% across the UK. A comment that basically says that they believe that interest rates and inflations think that the housing market's going to cool, and I don't necessarily disagree with that. I just don't think it's going to slow considerably. I think it will be a bit cooler. I think we've had a 9.8% this year. That's a huge rise. But I do think the story will continue to be around properties around this average or below average price. I think affordability, if you look at a London home of 500k, well actually the salary you need to be able to afford it is massive, and these mortgages are getting much, much bigger, and the amount you're going to have to pay is much, much bigger. So I think it becomes a little bit different in London, and I personally believe that affordability will continue to drag London back, whereas places like the places I'm investing, like Northamptonshire, Kettering, Wellingborough, Corby, 3-bedroom average house, we're securing them for between 170 and 200,000, something between that. Sheffield, again, we like Sheffield a lot. We've got a couple of properties going through at the moment. We bought a 3-bedroom for 110, I think. That's well below the average. So there are lots and lots of places where I think house price growth has got a long way to run. And if you think about like a £170,000 house, well, what's the mortgage on that on a buy-to-let? Like 200 quid a month? I mean, that's incredibly cheap. That has got a long way to go. Even on a repayment basis, it's only gonna be 400 quid a month. And that means that somebody buying it as their home, an average house, their mortgage is only gonna be 400 quid a month in the Northamptonshire Midlands area. I think it's incredibly good value for money at the moment. Interest rates have to rise an awful lot before they're gonna put any pressure on this, in my opinion. But my opinion is just my opinion, and I love reading yours. So put yours down in the comments so that I can have a read through. I'm answering every single comment. If you've commented on any of my videos recently, you'll notice I'm answering every single one. I'm going to continue to do so, so please, please, please comment. And thank you so much to everybody watching this video. I really do appreciate you, and I will see you next time. Cheers, guys.